What if I told you that the moment I stopped caring about making money was the exact moment I became consistently profitable? Sounds completely backwards, right? Most traders spend every waking moment obsessing over profits, analyzing charts for hours, desperately searching for that next winning trade. Yet here's the brutal truth that nobody wants to hear. The harder you chase money in trading, the more it runs away from you. I know this because I lived it for years. Every single day, I would wake up with dollar signs in my eyes, calculating how much I needed to make to pay my bills, to prove to myself that I wasn't wasting my time, to validate that all those months of studying weren't for nothing. My heart would race before every trade because each position carried the weight of my hopes and dreams. Sound familiar? But here's what changed everything. The day I realized that my obsession with making money was actually the root cause of every single trading mistake I was making. Every blown account, every revenge trade, every time I moved my stop loss, every moment of panic when a trade went against me, it all traced back to one fundamental problem. I cared more about the outcome than the process. Most traders believe that success comes from finding the perfect strategy, the right indicators, or some secret knowledge that professionals keep hidden. They think it's an analytical problem that needs an analytical solution. But trading isn't primarily an analytical game. It's a behavioral one. You can have the most sophisticated analysis in the world, but if you can't execute it consistently without emotional interference, you'll still lose money. Think about this for a second. How many times have you perfectly analyzed a setup? You knew exactly where price was going. You showed your friends, maybe even posted it online, and boom, you were right. Price did exactly what you predicted. But here's the question that reveals everything. Did you actually make money on that trade? Because if you're like most traders, probably not. Maybe you hesitated and missed the entry because you were scared of another loss. Maybe you got in but panicked and exited early, watching your winner run without you. Or perhaps you held on way too long because you convinced yourself it would keep going, watching your profit turn into a loss. This is the gap between being a good analyst and being a profitable trader. And it's a chasm that most people never cross. Let me paint you a picture of what actually happens in a typical trader's mind during a normal trading day. You wake up and check the markets. You see a setup forming that looks absolutely perfect. Your analysis tells you everything you need to know. The technical setup is there. The risk-reward ratio looks incredible. Everything checks out on paper. But something happens in that crucial moment before you click the buy or sell button. Your mind starts racing with thoughts that have absolutely nothing to do with the chart in front of you. You remember last week when you took a similar trade and it stopped you out immediately. You think about the bills that need to be paid. You wonder if this time will be different. Maybe you should wait for more confirmation. Your finger hovers over that button, and instead of executing based on your careful analysis, you're paralyzed by a storm of emotions and thoughts. Fear creeps in. What if this trade doesn't work? What if I lose more money? What if I'm wrong again? These thoughts have nothing to do with market structure or technical analysis. They're entirely psychological. Or here's another scenario that plays out constantly. You actually take the trade. Good for you. But now you're in the position, and suddenly every single tick against you feels like a personal attack. Your heart rate increases. You start checking the position every 30 seconds. That take profit level you carefully calculated based on technical levels suddenly seems way too far away. What if this trade reverses and you give back all your money? Your mind starts negotiating with you. Maybe you should move your target closer just to be safe. Maybe you should get out now and take a small win rather than risk it becoming a loss. Maybe the market is trying to tell you something different. Here's what's fascinating about everything I just described. Nothing in those scenarios has anything to do with technical analysis or market fundamentals. Nothing. Your charts didn't change. The market structure didn't suddenly become unclear. The setup that got you into the trade is still completely valid. What changed was entirely internal. It was all happening inside your head. And this is exactly why trading success is more about behavior management than market analysis. You can spend 10,000 hours learning how to read charts, but if you can't manage what's happening in your own psychology, when real money is at stake, none of that knowledge matters. You'll keep making irrational decisions that contradict your own analysis. You'll keep being your own worst enemy. You'll keep experiencing that frustrating cycle where you know what you should do, but you just can't seem to do it consistently when it matters most. The market doesn't care about your bills. It doesn't know that you need to make money this week. It doesn't understand that you've been studying for months and you deserve to be profitable. The market simply moves based on supply and demand, institutional flow, and countless other factors that have nothing to do with your personal situation. But when you approach trading with the primary goal of making money, you're essentially asking the market to solve your problems. You're putting pressure on something that operates completely independently of your needs and desires. This creates a fundamental misalignment that leads to emotional decision-making. Every time you enter a trade thinking about how much money you're going to make, you're setting yourself up for disappointment. Every time you calculate your potential profits before you even take the position, you're creating attachment to an outcome that isn't guaranteed. Every time you trade with money you can't afford to lose, you're guaranteeing that fear will override your logic. The professionals who consistently make money in the markets have learned something that most retail traders never figure out. They've discovered that the secret to making money is to stop trying to make money. Instead, they focus entirely on executing their process flawlessly, following their rules without deviation, and managing their risk with mathematical precision. When you shift your focus from outcomes to process, something magical happens. The pressure disappears. The emotional attachment fades. You start making decisions based on logic rather than hope or fear. You begin to see the market clearly instead of through the distorted lens of your financial needs. This isn't just some philosophical concept. It has real, measurable effects on your trading performance. When you're not emotionally attached to the outcome of each trade, you can cut losses quickly without hesitation. You can let winners run without getting scared and taking profits too early. You can wait patiently for high-quality setups instead of forcing trades out of boredom or desperation. The path to consistent profitability begins with a fundamental identity shift. Instead of seeing yourself as someone who trades to make money, you must become someone who trades to execute a proven process with discipline and precision. Money becomes a natural byproduct of this execution, not the primary goal. This shift isn't something that happens overnight. It requires you to fundamentally rewire how your brain processes trading decisions. Most traders resist this because it feels counterintuitive. How can you make money if you're not trying to make money? But think about it this way. Have you ever noticed that your best trades often happen when you're least emotionally invested in them? Maybe you placed a position right before you had to leave for a meeting. You couldn't sit there and watch every tick. You couldn't second guess yourself or move your stops. You just set it and forgot it. And when you came back hours later, you found yourself in a beautiful winner that played out exactly as planned. That's the power of detachment. The problem is that most traders can't replicate this state of mind consistently. They think they need to be actively managing every position, constantly monitoring the markets, always ready to react. But this hypervigilance actually works against them. It creates noise where there should be clarity. It generates anxiety where there should be calm confidence. Professional traders understand something crucial about market psychology. The market rewards patience and punishes desperation. It favors those who can wait for the right opportunities and penalizes those who force trades. When you're desperate to make money, desperation seeps into every decision you make. You see setups that aren't really there. You convince yourself that mediocre opportunities are actually great ones. But when you approach the market with genuine indifference to any single outcome, you develop what I call selective vision. You become incredibly picky about what qualifies as a tradable setup. You're willing to sit on your hands for hours or even days, waiting for that perfect confluence of factors. You're not trading to generate activity, you're trading to capitalize on genuine edge. This mindset shift also changes how you handle losses, which is perhaps the most important skill in trading. When your primary goal is making money, every loss feels like a failure. Every red day attacks your sense of progress. You start questioning your strategy, your analysis, even your decision to trade at all. This emotional turbulence leads to revenge trading, overtrading, and all sorts of destructive behaviors. But when your primary goal is process execution, losses become data points rather than personal attacks. A loss that happened while you followed your rules perfectly is actually a success from a process perspective. It's proof that you can maintain discipline under pressure. It's evidence that you're capable of taking necessary risks without letting fear paralyze you. This reframing is absolutely critical because trading is a probability game. Even the best setups fail sometimes. Even the most accurate analysis gets invalidated by unexpected events. If you tie your self-worth and sense of progress to individual outcomes, you're setting yourself up for an emotional roller coaster that will eventually destroy your account. I remember the exact moment this concept clicked for me. I had taken what I thought was a perfect trade. Everything aligned beautifully. The setup was textbook. My risk management was pristine. My analysis was thorough. And the trade lost money immediately. In the past, this would have sent me into a spiral of self-doubt and frustration. But instead, I felt something different. I felt proud. Proud that I had executed my process flawlessly. Proud that I had followed my rules without deviation. Proud that I had taken a calculated risk based on sound analysis rather than hope or fear. The money I lost was irrelevant compared to the behavioral victory I had achieved. That single trade taught me more about successful trading than months of winning positions ever could. It showed me that my relationship with money was the biggest obstacle between me and consistent profitability. It revealed that I had been measuring the wrong things and focusing on the wrong metrics. From that day forward, I started tracking different statistics. Instead of just looking at profit and loss, I began measuring rule adherence. Instead of celebrating big winning days, I celebrated days where I executed my process perfectly regardless of the outcome. Instead of getting frustrated with losing streaks, I got frustrated with behavioral lapses. This shift in focus had immediate and dramatic effects on my trading performance. My decision-making became cleaner, my entries became more precise, my exits became more systematic. I stopped moving stop losses. I stopped taking profits too early out of fear. I stopped forcing trades when the market wasn't offering clear opportunities. The irony was beautiful. The less I cared about making money, the more money I made. The less attached I became to individual outcomes, the better my overall results became. The less I tried to control the market, the more control I gained over my own performance. But here's where most traders get stuck. They understand this concept intellectually, but they struggle to implement it emotionally. They know they should focus on process over profits, but when they see their account balance fluctuating, all that knowledge goes out the window. Their primitive brain takes over, and they revert back to outcome-focused thinking. This is why developing the right mindset isn't just about understanding concepts. It's about rewiring your emotional responses through consistent practice. It's about training yourself to find satisfaction in discipline rather than dollars. It's about learning to measure success in terms of behavioral consistency rather than monetary gains. The most successful traders I know have developed what I call process addiction. They're genuinely excited about following their rules. They get a dopamine hit from perfect execution. They feel more satisfaction from a well-managed losing trade than from a sloppy winning trade. This isn't just philosophical posturing. This is practical psychology that directly impacts their bottom line results. When you become addicted to process excellence, you naturally start doing all the things that lead to long-term profitability. You become incredibly selective with your setups. You manage risk with mathematical precision. You maintain emotional equilibrium regardless of recent results. You make decisions based on logic rather than fear or greed. Most importantly, you develop unshakable confidence in your approach. This confidence doesn't come from recent wins or losses. It comes from knowing that you're consistently executing a proven methodology with discipline and precision. It comes from trusting your process even when individual trades don't work out as planned. This confidence becomes your greatest trading asset because it allows you to operate from a position of abundance rather than scarcity. When you're confident in your process, you're not desperately chasing every potential opportunity. You're not afraid to miss out on trades that don't meet your criteria. You're not tempted to deviate from your plan when things get uncomfortable. Think about the difference between trading from scarcity versus abundance. Scarcity mindset tells you that you need to take this trade because you might not get another chance. It whispers that you should increase your position size because you need to make back yesterday's losses. It convinces you that you should hold on to losing positions because admitting defeat feels too painful. Abundance mindset operates from a completely different paradigm. It knows that opportunities are endless in the markets. It understands that missing one trade means absolutely nothing in the grand scheme of your trading career. It recognizes that small losses are simply the cost of doing business in a probabilistic game. When you operate from abundance, you make radically different decisions. You pass on marginal setups without any emotional attachment. You cut losses quickly because you know there will be better opportunities tomorrow. You let winners run because you're not afraid of giving back paper profits. You trade smaller position sizes because you're not trying to get rich on any single trade. This abundance mentality directly contradicts everything your primitive brain wants to do. Your ancient survival instincts are designed for a world where resources were scarce and missing an opportunity could mean life or death. But trading requires you to override these instincts constantly. It demands that you embrace uncertainty, accept losses, and remain patient when every fiber of your being wants immediate action. The key to developing this mindset is understanding that your emotional reactions to money are learned behaviors, not hardwired responses. You weren't born caring about profit and loss statements. You weren't born feeling anxiety when your account balance decreases. These responses were programmed into you through years of conditioning about what money means and why it matters. But here's the liberating truth. Anything that was learned can be unlearned. Any emotional pattern that was created can be rewired. Any behavioral habit that was formed can be reformed. The process isn't easy, but it's entirely within your control. Start by examining your relationship with money outside of trading. Do you tie your self-worth to your net worth? Do you feel anxious when you spend money on anything? Do you constantly compare your financial situation to others? These underlying beliefs about money will inevitably show up in your trading decisions. Many traders discover that their trading struggles are actually symptoms of deeper issues with self-worth, control, and validation. They're not really trying to make money from the markets. They're trying to prove something to themselves or others. They're seeking validation that they're smart enough, disciplined enough, or worthy enough to succeed. But the market is a terrible place to seek validation. It's completely indifferent to your personal struggles and insecurities. It doesn't care about proving anything to anyone. It simply moves based on collective human behavior, institutional algorithms, and fundamental economic forces. When you try to use trading as a vehicle for validation, you create enormous psychological pressure around every decision. Each trade becomes a test of your intelligence, your worth, or your potential. This pressure makes it nearly impossible to think clearly or act rationally. You start making decisions based on what you need to prove rather than what the market is actually showing you. The solution is to separate your trading performance from your personal identity completely. Your account balance has nothing to do with your value as a human being. Your win rate has nothing to do with your intelligence or competence. Your recent trading results have nothing to do with your potential for future success. This separation allows you to approach each trading decision with emotional neutrality. You're not trying to prove anything. You're not trying to validate anything. You're simply executing a mechanical process based on predetermined criteria. This mechanical approach is what allows professionals to maintain consistency across thousands of trades over many years. But achieving this level of emotional detachment requires more than just intellectual understanding. It requires you to fundamentally change how you define success and progress in your trading journey. Instead of measuring success by daily or weekly profits, start measuring it by behavioral consistency. Did you follow your trading plan exactly as written? Did you manage risk according to your predetermined rules? Did you maintain emotional discipline during volatile market conditions? Did you avoid taking trades that didn't meet your criteria? These are the metrics that actually predict long-term profitability. When you start celebrating these behavioral victories, something remarkable happens. You begin to enjoy the process of trading itself rather than just the potential outcomes. You start looking forward to executing your methodology with precision. You find satisfaction in maintaining discipline under pressure. This shift transforms trading from a source of stress into a source of personal growth. Every trading session becomes an opportunity to practice self-control, patience, and rational decision-making. Every challenging market condition becomes a chance to test your psychological resilience. The most successful traders often describe their relationship with trading as meditative or Zen-like. They're completely present in the moment, observing market action without emotional attachment. They're engaged but not anxious. They're focused but not desperate. They're confident but not arrogant. This state of mind doesn't happen automatically. It's developed through years of conscious practice and self-awareness. It requires you to constantly monitor your internal state and adjust your approach when you notice emotional interference. It demands that you prioritize psychological development alongside technical skill building. Many traders make the mistake of thinking that once they find a profitable strategy, their struggles will be over. They believe that the right system or methodology will solve all their problems. But the reality is that having a good strategy is just the beginning. The real work lies in developing the psychological capacity to execute that strategy consistently over time. This is why so many traders can be profitable for a few weeks or months before giving back all their gains. Their strategy was never the problem. Their behavior was the problem. They never addressed the underlying psychological patterns that caused them to deviate from their plan during stressful periods. The path forward requires you to become your own behavioral analyst. You need to study your own patterns with the same intensity that you study market patterns. When do you tend to make mistakes? What emotional states lead to poor decisions? What external factors influence your trading behavior? Start keeping a detailed journal, not just of your trades, but of your thoughts and emotions throughout each trading session. Notice the subtle signs that indicate when you're starting to operate from desperation rather than discipline. Learn to recognize when you're seeking validation from the market rather than simply executing your process. The moment you master this mindset shift, everything changes. Trading becomes less about forcing outcomes and more about surrendering to the process. You'll discover that consistent profitability was never about finding the perfect strategy or timing the market flawlessly. It was always about developing the psychological discipline to execute your plan without emotional interference, trade after trade, day after day, regardless of recent results.